Hello everyone, and welcome to another interview here on Coin Bureau. And today I'm joined by a very special guest, Mr. Jeremy Allaire. He is the CEO and founder of Circle Internet Financial, obviously the issuers of USDC Stablecoin. So Jeremy, thank you for coming on and welcome to Dubai.
Thank you. It's awesome to be here.
Yeah, man. So Jeremy, we've got very limited time, so I want to dive right into the questions because we've got a lot to get through. So I wanted to ask you specifically about something you spoke about last week, and this was that you said you think stablecoin could become 10% of the global economy in 10 years. So that's an ambitious ask. So I'm curious, what do you think needs to happen for that to occur?
Well, so my high-level view is this: is that in the near term, so let's call it the next 12 months, the next 24 months, stablecoins are going to become codified in a legal way and defined as a form of electronic money that is acceptable and usable in almost all the major financial market centers in the world. And as that happens, this new form of money, stablecoin money, will be able to be used by people, households, corporations, financial institutions, sort of broadly. It will be kind of unlocked for general use. Now, my view is that, like other internet scale platforms, which have been transformed by open networks, open software, the kind of continuous innovation cycles of software on the internet, that once you have that legal clarity, the innovation that's happening at the technology level is going to drive stablecoin money to represent more and more of kind of electronic money in circulation. And that more and more of the economic activity that's intermediated by the internet will be intermediated using blockchains and stablecoins. And so the sort of percentage of the world's economic activity that is natively built on the internet financial system, natively built up on the internet, will grow. Just like, today, the percentage of retail commerce that is mediated by the internet it's still less than 30%, right? The percentage of time people spend watching video is actually still, the vast majority is like cable, broadcast, satellite, etc., even though here we are with video on the internet, right? And so over a decade or over 2 decades, the concept that stablecoin money, blockchain infrastructure powering that, could represent 10 or 20% of economic activity that's happening in the world is not unreasonable, because that's basically what's happened in commerce, software, communications, information distribution, all these other places. So I'm just sort of looking back at the past 20 to 30 years and these epochs of internet infrastructure development, and I'm looking forward for the next 10 to 20 years and looking at this is the epoch of the internet financial system. What percentage will it grow into? So that's kind of how I think about that and how I get to that kind of way of
historical precedent, you think, in mapping it out.
And it's also that it's not just that the historical precedent is there, is that the actual, I call it the new physics of money, which is basically money has never had the physics of the internet. It's never had the cost of storing and moving value has never been zero. And when you get to an environment where the cost of storing and moving value goes to zero, the velocity of money expands extraordinarily. The amount of actual economic activity that can happen with money actually goes exponential. And that's not to say anything of what happens when you start really innovating through smart contracts, where complex forms of commerce, complex forms of economic relationships, like a labor relationship, or a complex form of financing around the creation and development of a product, or imagine all these things. When those can start to be intermediated by smart contracts, the utility of money grows dramatically. And so all of those things in my mind are contributors to this idea that just a greater and greater portion of the world's economic activity will happen this way.
Okay, and interesting now to take a counterpoint now, because you mentioned, of course, regulation, and I'm curious then, are there any sort of potential roadblocks that could limit this growth that you see in 10 years' time?
I mean, definitely. I think this is really, as we were talking before we started recording, like the kind of the intersection of law and this technology, right? I think this is like with, for example, with AI, we're at a really critical point where governments could overregulate. Some people would argue they should, that the dangers are too severe, that AI could be unleashed, and who knows, right? And so societies are having to grapple with, and law is just societies grappling with issues at the end of the day. That's what law is, right? So you got smart people trying to mediate and figure out, like, okay, what do we do with this thing that is new in the world, and how do we make sure that it's safe and can kind of work within the political, economic, and social structures that we have. So with AI, like that's another one of these things where it's like, well, I could imagine how that could go wrong, where you could have a kind of like shutting it down and lose that. And I think the same thing holds for crypto, right? The same thing holds for cryptographic computing, crypto as a fundamental technology infrastructure, and stablecoin money is just one application of that technology, of course. But you could imagine, governments basically saying, you know what, this is too disruptive to the way our economic system works, or this could actually, cause huge issues from a fiscal and monetary policy perspective in a given country or multiple countries, and then just to say like, no, we're not going to allow that, right? So there are those kinds of risks. I think those risks exist for breakthrough technology, synthetic biology, artificial intelligence, crypto, things like that. And so the key from my perspective is these sort of legal risks, which are really political decisions that get applied to the technology. It's our job as entrepreneurs, as technologists, as thought leaders to try and build things safely, right? Try and build things in a way that demonstrate the utilities to society, and really try and be thoughtful about addressing risks and not allowing things to kind of happen that can cause severe damage that then forces a rollback or things like that.
Coming to these risks that these regulators and governments worry about, do you think that they're warranted, or do you think that they are concerns that come from a place of lack of understanding or lack of education around these particular assets?
I think there's lots of categories that I think raise questions, right? So there's sort of technology, is this technology robust? Is it secure? How can we safely operate it so that people don't lose everything, right? So there's a whole lot of questions around technology, security, operations, like all of that. Those are very much addressable questions in my view, and they still require technical progress. It's not like we're done and we can just say this all just runs smoothly and we're good to go, right? So there's like real things that can be addressed there. There are other areas which are, I think, just like they're more deeply related to fiscal and monetary policy questions, right? That an internet financial system, introduces questions that force, governments to really grapple with, like, do I want as a government to have my own proprietary currency, or do I want to more fully adopt a global currency or a globally, popular currency? And so I think, that's something that I think will accelerate, which is that, when everyone in the world just has a smartphone or a computer and has infinite capacities through AI agents that they can just spawn and do things, and they're all connected directly on the internet, and they need to conduct, value exchange, right? There's going to be consolidation around the number of digital currencies that people are going to want to use. And so that is going to force, I think, a lot of governments around the world to say, okay, what are we adopting, and are we going to adopt something that's more global? And that has big implications on how governments, for example, finance themselves, collect taxes, issue bonds. The very nature of a sovereign and its control over its own monetary structure is almost control of your seigniorage of your money and control of the military and the physical territory. Like that's kind of what a sovereign is, right? So I think it does raise some complex challenges there, and I think we're going to see different places in the world where that kind of rears itself and becomes more challenging.
So it's mainly the sovereignty of countries' money systems. They're worried about potentially this rival currency, right? Yeah.
That's right. Yeah.
Okay, so just coming back to Circle and USDC more specifically, obviously, I know your background. You came into Circle because you were, interested in decentralization, the concept of decentralization, and USDC by itself is it's quite centralized in the sense that you obviously utilize custodians for banks. You've obviously very much gone the compliance route, which many cypherpunks and traditionalists would bristle at.
Yeah.
So I'm curious, how do you square the circle there, and do you think that it goes contrary to your initial ideals about cryptocurrency?
So I come at this as an internet technologist, and so I've been working on the internet for an internet infrastructure for 30 years, and what's interesting to me about the internet is that it's an open network that's permissionless, that you can connect a computer to it, and there are open protocols that are basically defined as technical specifications. There's open source software which is free and available that implement those protocols, and that stack basically has given us the internet that we know today. And huge, incredible utilities have been built up, using that. And it's that infrastructure that got me excited about cryptocurrency, and then ultimately about stablecoin and what we're doing with USDC. And so for me, what's important is that the public internet and the public networks that we can build on remain open and decentralized, right? So like the substrate of all of this needs to be these public blockchain networks that provide these new internet operating system layers, and that's fundamental. Having those be decentralized infrastructure is valuable to society as a whole. Now, there are going to be what I call endogenous assets to those networks, like BTC or ETH or Sol or other things. Those are endogenous assets. Those are digital commodities that they themselves effectively have become decentralized, and those are valuable as digital commodities. But we also need to kind of bridge this world with the existing financial system, right? We need a way to take real value, which is government debt money, which is the world runs on government debt money. We need to be able to take government debt money and bring it onto those systems, and that's what we're doing, right? That's what USDC is doing. We're basically saying, hey, you've got the obligations of government that's in cash and in T-bills and things like that, and we're just creating a tokenized version of that cash. And we're allowing it to be utilized on these open permissionless networks, which is extremely powerful. But as a utility to mainstream society, I think that's what they want, right? Mm-hmm. That the mainstream society is not saying like I want a synthetic dollar that is not backed by anything other than crypto collateral or by the kind of a delta neutral strategy for trading perps against spot and staking yield or whatever. Like there's stuff that's cool, but at the end of the day, if you're Amazon or you're you're a household or whatever, you kind of want to know that this is value good in all economic transactions. And so that's why for now, at least for the coming decades, I believe that kind of leveraging fiat and leveraging essentially the safest form of fiat that we can come up with, and then tokenizing that and making that available for a medium of exchange is super helpful, so long as we remain committed to the open, permissionless blockchain infrastructure that then we can build on, connect to, get the network effects from it, and the openness in terms of programmability and things like that.
So I want to come back to something you mentioned there, because you mentioned that tokenizing and caching, the potential short in delta neutral strategies and tokenizing delta neutral strategies, and it's pretty interesting because I know this may be a hot potato because of the stablecoins as a competitor, I assume, but I'm curious to get your thoughts on USDE, Because that's obviously now taken a lot. And obviously, this comes back to the question of decentralization, right?
Yeah.
We've obviously seen massive blow-ups with decentralized stablecoins.
Right.
And, they just weren't they were badly structured. So I'm curious to see what you're thinking about current decentralized stablecoin offerings, and if there are any potential risks and why you think it's different in your model.
Yeah, we're definitely focused on like legal fiat digital currency models.
Yeah.
Like that's like our swim lane, and we think that that's a big one, and that is certainly today like overwhelmingly what people prefer to use. I think there's ranges of decentralization, right? So there are some projects that they're run by a team, and there's like authorized participants who are providing liquidity into the scheme. There's like centralized exchanges that are actually the back ends and like that. So they're not decentralized, right? Maybe the way in which people can create and redeem is decentralized, or doesn't. There's no KYC or whatever. So it's sort of. There's no KYC, but it's actually sort of centrally organized and run. Like, so there's a huge range here, right? Now you have things like historically, like I guess it's called Sky now, but like like MakerDAO and DAI, and where you really did have like crypto collateral that basically is margin lending and creating these synthetic dollar units off of margin borrowing, right? That's a debt money that's natively backed by the collateral of endogenous crypto assets, and those have a role, right? But those are more like they're almost more like debt products, on-chain debt products that happen to have the borrowed unit be denominated in a dollar, right? And there's an incentive to kind of hold the peg, right? So all of these are interesting, and I think clearly over time, like there's huge opportunities for synthetic stable value digital currencies, without a doubt. And it's not clear like at what point like corporations or households or the underlying kind of building blocks of like how commercial activity in the world happens when it's hard to see how those would depend on something like that. And so I view them as interesting and important experiments, and in some cases some of these are like effectively a way to play like a hedge fund strategy, and so I view them more like investment products. So and most people are using these as investment products, right?
To get some yield.
Get some yield, and so it's like, hey, this is there's a strategy I understand for trading, and I can't execute it myself, so I'm going to basically give people some money to go do it for me. That's sort of like an on-chain hedge fund that pays in a dollar-denominated
It's not
form.
really a stable coin. It's
right. So it's a different
yeah.
thing, right? So I think what's interesting is that when you look at the work that's happening around the world within the regulatory world, is that central banks in everywhere from the UAE central bank to the Hong Kong Monetary Authority to the Federal Reserve to the European Banking Authority, right? All these regulatory bodies have kind of come to a consensus about what a payment stablecoin is. So it's a fully reserved, fiat-backed, whether it's highly rated short-term sovereign debt and cash, that are supervised as like payment system activities and have very specific statutory obligations to holders, and the people who issue them are held to extremely high standards of lots of stuff. Like that is what actually like stable coins, at least in the sort of emerging legal real world context, look like, and that's a consensus view everywhere in the world. And so that's what's likely to get mega scale in the coming 5 to 10 years, in my view.
Okay. I'm just curious, then coming back to reserve-backed, fully stable-backed, dollar-backed stable coins, like you referred to, ready with the reach. And I'm curious to know exactly from you why you think a stable coin that didn't quite make it, that had all the financial backing and supposedly had the network effects as well, was Libra. So I'm curious as to what you think happened with Libra. Why it never got off the ground? Did it not? Why did the government or regulators bristle at that? And what Circle's approach has been different to it?
Well, it's fascinating because I've been close to all of that for many years. So we obviously launched USDC in actually originally announced it in May of 2018 and sort of began production launch of it 6 years ago. That was well before Libra existed, right? So we were kind of pioneering in this space. The challenge for Libra was very straightforward. Facebook. Here's a white paper from like a company that has 3 billion users saying like, we're building a new synthetic global digital currency and we're going to roll it out to 3 billion people. And basically governments were like, no fucking way are you going to do that. Like, you're not going to do that, basically. And so the reaction was so severe and so negative, and it was so threatening that there was no chance in hell that that project was ever going to launch. Whereas, a company like Circle that's like regulated already, is building from the ground up. We're not threatening, and we've done things properly, the right way, and have continued to build that. Now, what was interesting that happened though is that, when that happened, when they kind of put that out there in 2019, immediately, first, the G7, the group of 7 nations, and then the G20 said, oh my God, we need to come up with like a whole framework to regulate, stablecoins, because like whether it's Facebook or something else, this is happening, it's here, and we need to figure out a way to deal with that. And so we were showing up to meetings with the Financial Stability Board, which is like the supranational body that sort of works on like global rules for the financial system, and having really good dialogue about how could one safely set up and run a stablecoin. And then they came up with a set of policy recommendations in 2021 that was like, here's how we recommend we regulate this. And they were pretty good. There were some challenges, but like they were pretty good. And now all the governments in the G20 are doing it. That's what all these stablecoin laws are basically based on the G20 recommendations, and so it's now just becoming law. And so the irony is that Facebook coming in forced global governments and major governments to say, hey, we got to come up with it. Those governments then engaged with like the good actors in the industry and this increasing interest in the industry, and are now forging laws that are reasonable and that are getting rolled out all around the world, which is actually going to unlock massive stablecoin adoption finally.
So Libra fell on its sword for all of us.
Yeah, I mean, in some ways.
Yeah. Okay. So that actually leads to my next question, obviously, in terms of G20s and global adoption of stablecoins. You obviously have launched recently Euro step-back stablecoin, and I'm curious, are there any other fiat currencies you consider issuing a stablecoin for, and how far along in the process are they?
Yeah, so obviously like dollar stablecoin we think is sort of the most important product, and I think what's interesting is Euro stablecoin I think is also very interesting, and our EURC, the Euro stablecoin, is now the largest Euro stablecoin. It's grown pretty nicely, and we have high hopes. What's interesting about that is that really stablecoins have historically been primarily used either in digital asset trading markets where everything's dollar denominated, or as like an international kind of settlement mechanism where people are like, yeah, I want to like trade and settle in dollars and stuff. And so naturally that like lends itself really strongly to dollars. With the adoption of MiCA and a comprehensive EU-wide regulation for stablecoins, this is a big milestone where basically the European Economic Area has almost 800 million people. It's a huge economic bloc, and they've now just made stablecoins, including Euro stablecoins, legal electronic money in that region. And so there's a big opportunity if commerce and finance moves on chain. Mm-hmm. They're going to do it in euro. They're not going to do it in dollar, right? The Eurozone is the Eurozone. They're going to do it in euro. And so there's a big market opportunity with that. And so I think when we think about our strategy, there are some other really big currencies that are out there. The RMB is a big one. Probably not going to do that. It's a tough one. There's pound sterling, widely used in world trade, Aussie dollar, and a lot of commodities FX, and there's yen is used in a lot of trade and is a reserve currency, and so you have some of these. But I think our philosophy really is we want there to be as many like local currency stablecoins as possible. Like when we talk about building the internet financial system where money moves on chain and value exchange moves on chain, is going to need local currency stablecoins everywhere. And it's really exciting because now that there's regulation, like the UAE central bank, they've got laws on the books, and there are a whole bunch of AED stablecoins that are in development, or that the central bank is, it has to be blessed by the central bank. There's no chance for an AED stablecoin that's not blessed by the central bank. Like, that will be legal money in the UAE, right? So that's really key. And so I think our view is, like, look, we're building a stablecoin network that has all this technology for the adoption of stablecoins. How can we work with all these great stablecoin issuers around the world to connect to the technology that we've built, to connect to the network that we've built, and help turbocharge their use and distribution? It's very complementary in many respects to what we already do with USDC.
Okay, and you've obviously mentioned there just the UAE, these stablecoin issues that are working with the UAE central bank. I'm curious, have you begun discussions at all? Are you considering it as something Circle would want to release eventually, like a dirham-backed stablecoin?
Yeah, I don't see Circle necessarily issuing a dirham-backed stablecoin. But what I can say is we're very committed to this market. We think this is a hugely important market. Both, Dubai, Abu Dhabi, the whole federal system, and the openness that's here, and so we see tremendous opportunity for Circle in the region, and great opportunities to work with some of these emerging projects, right? Because we want to see, like, on-chain FX between dirham stables and USDC and EURC. We want to see more seamless cross-border flows that can kind of cross between these and move and settle. And we want to see people who are coming in who might have an app that has USDC and make a payment to be able to have that kind of convert down to an AED stablecoin. So, like, lots of opportunities for sure. And I think we're looking at and evaluating all of that. And I think one of the things that is positive about the UAE central bank's kind of policy around stablecoins is that they've come up with a way to treat kind of foreign currency issued stablecoins and sort of how those can work in the local market as well. That's something that I think regulators around the world are all trying to figure out how to do, and so there's clearly a role for us here as well.
Okay, so no plans in the book just yet, but potentially. Yeah.
No plans, and I think we're just watching really closely the kind of initiatives that are there, and I think we're very optimistic that over the next year we're going to see some great products get out there.
Cool. So coming back to central banks, obviously the biggest pet project of central banks that may be, well, some could say it's in competition to CBDCs, stablecoins, but CBDCs, right? So how do you view stablecoins in the context of CBDCs? Could they be complementary or potentially challenging to it?
Yeah, I mean, we haven't really seen any CBDC projects that have gained any traction. And so they're definitely research projects in a lot of jurisdictions. But the biggest project in China, which has been launched for 3 years now, just no one uses it. And I think there's a lot of reasons why. I think even in China, they don't trust their own government, and they want, like, an air gap between their money and the government. I think technologically, right, governments aren't very good at technical innovation. They're slow. They're not staying on top of the latest technology. Whereas you look in China, like Alipay, WeChat Pay, like, you've got, like, voice payments. You just walk into a store and use your voice, and it does voice recognition and makes your payment. Like,
voice payment.
Yeah, it's, like, so cool. You just go up.
I know face payments.
Yeah, but no, voice payments, right? So and it, like, uses AI to, like, filter out everything and use your voice print. So, but, like, that's my point is, like, there's technology innovation that's overwhelmingly driven by the private sector. And that's, like, if you look at the history of the internet and internet utility, it's just overwhelmingly driven by the private sector. So, like, do we want governments running, like, AIs versus, like, the private sector, or do we want governments running our messaging apps, or do we want private sector? And so I think there's a strong preference both by users and like a market and technological reality that this constantly upgradable, software-powered, internet-based model is just going to deliver better utility. And so the key in that case then is central banks need to clearly define the rules, and they care about financial stability, and they care about like the safety of these fundamental assets. And so certainly we're seeing this in different jurisdictions, but structures that hold the reserves in the safest instruments in a trust structure, like create safeguards so that even though the private sector is sort of operating the tech for this, it's got the kind of the safety that what the central bank might care about. Or in some cases, like in England, where the stablecoin law that's going to go to Parliament, like it requires stablecoin issuers, whether they're banks or non-banks, to hold 100% of the reserves at the central bank. So is that central bank digital currency? Well, no, it's stablecoins issued by private sector intermediated delivery and distribution, tapping the technological innovation, but it's kind of got the safety of a central bank cash asset. So I think we're going to see the relationship between sort of central bank kind of considerations and then like private sector innovation kind of connecting, and stablecoin money will be primarily where that happens.
So do you think that central banks, are they getting comfortable with the concept of like a global stablecoin eventually? Like, with the, for instance, what's the Fed, how does the Fed view? Because I know the Fed's released lots of papers on stablecoin adoption. Are they not feeling like, because obviously they are the issue of the money, right? And it's like, how do you think they view the fact that a global stablecoin, adoption?
Well, I mean, I think the best proxy for this is just sort of generally like currency adoption. So, overwhelmingly, the most demanded hard currency in the world is physical U.S. dollars, right? So there's like 400 billion new cash instruments printed each year, and like the significant majority of that like goes overseas, right? So people want like that. And similarly, when you just look at economic activity in the world, that is sort of trade and people settling financial transactions, right? 65% of that is in dollars today, and so like the U.S. deals with this already, right? That's like being the world's reserve currency sort of is kind of, you have these network effects, you have this distribution, and I think it's there's some benefits for the United States from that. There's also some downsides to it as well, which is like if you sneeze, the world gets a cold. Like your decisions in terms of your monetary policy could have dramatic effects on the prices of sovereign debt in other countries, which could cause fiscal crises and could cause economic upheaval. And so, your job is kind of inflation and full employment in your own country, but then when you make decisions, it can cascade out. It's called the kind of the Triffin dilemma. And sort of this funny interplay, and so there's like positives and negatives. So I don't think stablecoins change that set of calculus, right? That much, at least not yet.
So going back more to USDC itself and USDC use case, and it's something that we've always tried to nail down in our research when we do videos and stuff. And this is the specific use cases in terms of percentages of USDC. So how much of it is, for instance, in DeFi? How much of it is used as collateral in leverage trading? How much of it is used in payments?
Right.
I'm curious to know just from you exactly like what is the breakdown?
Yeah. So we have a lot of data on this, and I think we're continuing to get better and better data on this, and it's really evolved. So it's been interesting to watch. Certainly from the early days where it was all sort of payments and settlement and like collateral in CeFi and DeFi, right? And today I think we think that still about 70% of the usage of USDC is sort of in CeFi and DeFi platforms and different purposes. However, when we interview users and do primary research, many users of these like CeFi and DeFi products are using them as kind of neobanking substitutes. So they're like, I hold USDC in my Binance wallet or my Coinbase wallet because I want to use this as like my cash, right? And so even though it's on a trading platform, it's being treated like hey, this is where I keep my dollars, right? I just had a meeting, with someone locally here who was from Kenya, and they're like, yeah, I mean, I have my Binance wallet, and like I hold my dollars in USDC, and like that's how I want to hold my how I want to hold my currency, and then similarly, even DeFi, right? I think we've seen, for example, this proliferation of all these like kind of crypto neobanks basically in every region all around the world, emerging markets especially, and these crypto neobanks basically combine like local on and off ramps with a simplified user interface, which is like pay, save, invest, like the kind of verbs of finance, and kind of connect those together so that like a user in Colombia or Mexico or the Philippines or whatever, like they're actually holding value in stablecoins. Their savings is like actually staking the stablecoin into a DeFi protocol. But the abstraction is this. So are those traders? No, those are actual end users. And so the other thing that we've noticed is that we can see continued growth in sort of small wallet holders of USDC. It's something we track really closely. And so these are people with maybe $10, $50, $100, et cetera. And we know that a lot of this is very international. And so what we're seeing is just sort of dollar store of value and dollar kind of payment as like a growing set of activity. And then anecdotally, we deal a lot with like these trading firms all around the world, and these trading firms are telling us that more and more of their clients are SMEs that are doing cross-border trade between, say, an emerging market or Latin America and Asia, and they want to use USDC as a way to settle trades. Not crypto trades, but commerce trades, right? So all of these things are sort of, kind of emerging growth patterns that we're seeing.
Okay, thanks. So so basically it's hard to necessarily ascertain exactly one specific use case. It's all melded together to us.
Lots of different use cases, yeah.
So the last 2 months of 2024, right? It's been a busy, very, very busy year. I'm curious to hear from you as one of the issues, the largest stablecoins. What do you think was one of the most important developments of 2024 for the sector, the crypto industry more broadly?
Yeah. Well, I mean, I think, I guess with the stablecoin, kind of lens on in focus, like I actually think the formalization and finalization and launch of MiCA in Europe was a major milestone. And I said this, I gave a short speech on July 1st in Paris when we announced our licensing and launch, which is that I believe that July 1st, 2024 will be viewed as a turning point ultimately. And it's because like this is such a big deal. One of the biggest geoeconomic areas of the world established that stablecoins are legal electronic money and have said this can be safely used by households, by corporations, by financial institutions, and put that in place. And that's just like a huge deal. It's the biggest market in the world that has sort of done this. And Europe's usually first on a lot of regulatory things, whether it's privacy or AI or crypto. But they're obviously a trendsetter. And I think it's a huge moment. And I think when we look back, like the sort of mainstreaming of this would be there. I think another one, which is maybe more recent, is Stripe, which is one of the biggest and most influential fintech companies in the world, has millions of businesses that work with them. One, they started accepting USDC for payment acceptance, and they made it a feature that any merchant can turn on, which is like really exciting. And then secondly, they just did $1 billion acquisition of a company called Bridge, which is also a partner of ours, that is a stablecoin payment company that is the
biggest acquisition in crypto, right?
Biggest acquisition in crypto. It's all about stablecoins. They're partners of ours, and so it's a signal that okay, this is now going to go mainstream. And so I think a lot more people are kind of leaning in. I think us in the industry, we kind of know this, but then when you get that kind of validation, it's very significant.
Okay. Micah and Stripe's crypto adoption. One final question to end off on then. So coming back to the 10-year projections. 10 years from now, which stablecoin will have the largest market cap? One that hasn't evolved, one that's here currently, or will it be USDC?
I hope so.
You hope so.
I hope so.
Okay.
Yeah.
Well, you guys are doing the right things there. So thank you very much for coming on, Jeremy. There's an amazing story of what's happening with stablecoin adoption, and it will be increasingly see more of that in 2025.
Thank you.
Thanks, Jeremy.
Great to be on.
Thanks.